When we're getting started building a home, one of the first steps for a lot of us is the loan that we're going to use to build the home, and what type of loan it is, what type of lender we're going to go with. This can all get really confusing, and it's great to have a creative lender to help you navigate those waters. Tyler McCaffety is that guy. We've known him for a long time. Steve and I got to sit down today and talk to him about the loans that he does and what he does in his own business, along with what it's like to be a business owner and, a family of business owners that he's a part of, big part of our community. Just an all-around great guy. Hope you enjoy. Let's begin to build. All right, so we have fellow Sam Houston State graduate Tyler McCaffety. McCaffety is one of the most respected names in our area. I mean, as far as empires and legendary names in Huntsville, Texas go, y'all are right up there, right?
Just trying to live up to the legacy. What can I say?
Yeah, there you go.
Are you from here?
Or trying to separate myself from it. I'm not sure which one yet, but no. Oh yeah, we're born and raised.
I got you.
Yeah, my grandfather and family have been here since like the 1880s.
Oh wow!
So we go way back.
That's way back. That's what I told you. I wasn't just playing.
He's like, I'm not bringing no. Yeah. That's awesome. So what did they do when they moved here? I guess did he start?
My grandfather, which is really my earliest memory of my family, obviously, my grandfather started an electrical contracting company back in the 50s. And my dad and them, they grew up in that. And my granddad built it. My father built it even more to what it is now. And right now they're the largest electrical contracting company in like the Tri-County area. So they do a lot of business.
That's cool. Yeah. So didn't have any issues?
Oh, whenever I grew up, I got shocked a lot. When I turned 12, my dad put me to work wiring houses and commercial buildings. And my grandfather and me sat down one time talking lunch, just shop talking, whatever. And he said, "Son, you got two choices in life. Work from the neck up or the neck down. Which one's it going to be?" I went to college, fell in love with finance, realized that was my niche, and said, "I think this is what I'm going to go into."
Yeah. Y'all got a long list of. I mean, y'all are a real entrepreneurial family. It looks like. I mean, I don't know your family super well, but convenience stores, storage units, you name it, right?
They've done a big portfolio of things. Real estate tends to be what we hinge on, just because it's what we know, and it's it's an asset you can put your hands on a little easier than something that's a little less tangible.
Yeah, and if you have a business and you're like. If you're making money on the real estate side of it, but also have a business there, then it's a double whammy.
Exactly. Yeah. My dad, I tell people all the time, my dad is like my biggest hero. And he's the guy that I look up to for every business decision. And not that I have to have his approval or anything, because he's disagreed with several things I've done. Yeah. But at the same time, it's not bad to have somebody you can bounce an idea off of.
Experience doesn't hurt.
What the best experience is the one you don't have to pay for yourself.
Oh. Yeah. No kidding, man. And it's not as easy to get as you would think. No. There's a lot of things we can learn, a lot of books we can read, videos we can watch, etc. But talking to someone that has been through it and knows, it's not just a technical thing that you follow ABC. There's a whole emotional curve to, running your own business, being in business for yourself and all that, and talking to someone that has been through all that. Whether it's a mentor or a family member or something like that. So that's really cool that you have somebody so close that knows the ropes like that.
I mean, that's one of the biggest blessings I have is family. I mean, like Jeremy was saying, we're from this area. My family lives within a 5-mile radius of each other.
That's
my
cool.
Entire family that I've ever known my whole life, from family get-togethers. My entire family lives within a 5-mile radius of this house.
Yeah.
And, my granddad, my brothers, my aunt, my uncle, and all them, they live 3 miles down the road, all within the same, couple hundred acres.
We're gonna have to cut that out. House, the studio. Okay, it's the studio.
I'm sorry.
No, I'm just.
We're not in a house.
We're actually not in a house.
Yeah. It's a studio.
Yeah. So that's cool. So you got into finance, I guess.
Yeah. So when I went to college, I thought I wanted to be a chiropractor or a physical therapist. I was like, yeah, that sounds good. Medical, you can make a lot of money in medicine, And I took my first accounting class and decided. This is fun, I wouldn't say accounting's fun. Let me be very clear about this, okay?
It's the one person in class. I took an accounting class and it was fun.
You forgot to ask for the homework, teacher. I was not that kid. No, but I soon got into the investing classes, and that's what really piqued my interest in money. I began to realize what makes the world go around, right? Everybody's got to deal with money, and so everybody's always either going to be asking for it or giving, one way or the other. So I fell in love with finance in college. Had my first job in finance as a teller at a bank, and ended up worked as a teller for 4 years through college. Full-time school, full-time teller. Got my opportunity after college to move to Abilene, Texas, middle of nowhere, USA, and be a loan analyst.
We have a lot of fans from Abilene, so y'all don't hold it.
There's gotta be at least 2 out there.
Hey, yeah, it was a great town. It was a great time. Thank God it was only a year.
Is that where the Cadillac Ranch is, or am I off? That might be Amarillo.
I think it's Amarillo.
It's
all up there. That's northwest of nothing.
Yeah,
that's what that is.
Yeah.
And
the high school finals is in Abilene.
Oh, okay, yeah.
I think they have a zoo.
They do?
They do have a zoo. That was actually the one thing that if you have 2 things to do. No, 3. You either go to church, you go to the zoo, or you go to the bar.
Golden Light.
The Golden Light?
Is that what it's called?
What is that? The zoo?
I'm trying to figure out.
Where are you at, man?
Abilene.
He's living in another town. I'm telling you.
I really thought there was a place called Golden Light.
Love it at the blue light.
Right. No.
Touche.
We'll pop up an image right now at the Golden Light.
Right.
Yeah, I don't know if we have approval for that.
Yeah.
Well, probably because the golden light really doesn't
It doesn't
exist,
exist,
so we
yeah.
can make whatever image we want.
Touche. No, and then so a year there, moved back to Huntsville, got an opportunity to actually opened one of the bank's mortgage divisions in East Texas, and so I started that division at a large retail bank, and then got an opportunity to run my own mortgage company.
That's cool. So and I looked it up. I didn't know what a mortgage broker did. Is that what you do, right?
Yeah.
Okay. Yeah. So you basically are the middleman between someone who needs a loan and someone who provides loans. Or?
I'm the one that does the work to get the job done, to
Cool.
get you the money to buy the house. Just in real estate, essentially. And a lot of loan officers doing what we do, they're a one-trick pony, where they do home loans and that's all they do. But I get bored real easy, and I like to diversify my abilities. And I said, well, man, I could either just do mortgages and I could just sell home loans, or I could find a way to make money doing every type of real estate that's out there.
Yeah.
And so I built brokerage relationships with banks and investors to find ways where people call me and they go, hey, man, do you do this kind of loan? Well, not directly, but I can help you take care of that. So finding ways to make money beyond the beaten path.
Okay.
Yeah, because a lot of the clients have different needs. Much like building a home, it's a confusing world that someone comes into that can be really intimidating. So, when the client comes in and has a different need, like you're there to help guide them through that process, basically.
Yeah, exactly. Mortgage it depends on who you're working with, but mortgage is fairly simple if you understand what you're doing. There's not a lot of people that understand the nitty gritty of what we do, and that's okay. You don't have to. But essentially, I get the details. You come to me for money. I get your financials, figure out how to fit it in a box. It may be a square hole, a triangle hole, or a circle hole.
Yeah.
We're going to shave off the edges and make it fit.
Yeah.
But it's going to be within the law, but we just find the money to get you what you need.
I got you. Yeah.
Yeah. So as a client coming in, what makes it easiest for you to help me?
For me to help you?
Yeah.
I mean, the biggest thing is communication.
Yeah.
A lot of people go, well, you're my loan officer. Here's my paperwork. Go get it done.
Yeah.
Like, okay, that's cool. It doesn't. That's not where it ends, though. The client has a job, and if I set up an expectation up front that, hey, this is me and you, then the deals usually go a lot smoother.
Yeah.
People get their job done. I get my job done. Everything goes pretty easy. So setting up a smooth line of communication in what we do is very, very important, because a lot of people take that for granted and just go, oh, when do we close?
Yeah.
I go, yeah, it ain't that simple.
Yeah, because when somebody comes in to our office to have a home built, for instance, if I am very clear on what your goal is, so what are we trying to accomplish, and then you help, be really open with me as far as, what's important to you, etc., then I can help a lot. If you just come in and you're real guarded and you don't open up and there's no communication, then I really don't have a way to solve that issue for you or to help you get to your goal, because I'm not clear on what your goal is. So then it's like, what do I have to sell you? I'll help you solve that problem. If we're not uniquely fit, then we need to know that too.
Right. Well, you need to know if you're going to be able to work with this person or not.
Yeah.
Because I'll be honest with you, everybody that calls me, we don't work together.
Yeah.
And we're kind of blessed. We've gotten to a point in our career where we can, in our business, where we can kind of select the clients we work with.
Yeah.
To an extent, I want to help literally everybody that calls me, but some people just can't be helped.
Well, for the client's benefit, if I want to help everyone and I get there and everybody shows up to my door, I can't.
and it's not just a volume thing. I'm not suited to help some clients. So the best way that I can help them is an honest referral, or maybe even just some guidance about what we're talking about. I had a meeting with someone the other day where it's like, hey, these are the things that when you're looking for a builder, you should look for. I'm probably not the best fit for you, but we still had an hour-long conversation, and I feel like they left with value. I got value out of the conversation, even though we weren't, a perfect fit for them.
Yeah, I mean, sometimes knowing what you can't do is the most beneficial thing for your own business.
Yeah,
and just admitting it.
Right, and the consumer side of it, like, because I've been on the consumer side of it, or I could see going into like someone who's going to go get a home built. You're nervous. You don't really know what to expect, what you don't know. You don't really, so it's kind of hard sometimes. So it is good to have those expectations and those kind of guidelines from y'all's perspective, I guess, so we know, okay, we need balance sheets. We need this. We need, tax returns. Because sometimes those people don't have a clue what they need, I would imagine.
Oh, man, people call me all the time and go, all right, I bought a house before, or I've never bought a house before. The answers and questions are always the same. They go, I really have no idea what I'm doing.
Yeah.
You just tell me what you need, and I'll get it for you, and we'll roll forward. But, for the most part, I mean, nobody taught me what I do. In college, I had a 4-year degree of a double major in banking and finance. I still knew nothing about what I do before I did it.
Right. And I can attest to that because I have the same degree and I don't know anything about what you do.
We learned how to put numbers on a balance sheet and a profit and loss statement in college, and then you go to business and go, oh, holy crap.
Yeah, I got decent in Excel.
Yeah, exactly. Can I use my calculator? Yeah, it's just life teaches you what it wants you to know.
Yeah.
Yeah.
I'm kind of in a position right now, like we're about to go and do some HELOC stuff or whatever, or maybe DSCR type loan, whatever they're called,
Yep.
But I'm in that mode right now, like research mode, like trying to figure out like what is the best option for me and how I can take basically the same thing for real estate and stuff like that. How do I advance forward in this? And it is a confusing world. As a guy who didn't major in banking and finance, it's super confusing.
Well, and I would tell most people, if you Google it, just trash that.
Yeah.
Because what Google's providing you as far as information goes
is baseline.
Well, it's baseline, but it's just it's really and truly.
Right, yeah.
And you can get any answer you want.
Right.
Exactly.
If you want the interest rate to be 8%, it's 8%. If you want it to be 2%, it's 2%. What do you want? Whatever you typed in the search bar.
Right.
It's we talked about this on another episode. It's like, when you Google what's wrong with your, if your stomach hurts and you Google it, like you either have cancer or, like.
Yeah,
so
everybody's a doctor on WebMD.
Yeah, exactly. So we recognize the joke about WebMD, but we don't recognize the joke about every other industry. Like every other industry, it's gospel. That's
absolutely.
I read it on the internet. It's
On the internet, it must be true.
Yeah. So, we can do XYZ. I read it on the internet. And as soon as we find somebody that can do that, we would be happy to help you with that. But we're going to be here in a minute.
Well, I'm one of those guys, what do they say? It's a measure twice, cut once type thing. It's much better to double check your sources. And if you read it on the internet, you probably should triple check it.
Right. Yeah.
Call a professional.
Well, you mentioned getting somewhere in your business to where you did have a steady volume, and I know from owning a business, it's extremely important and comforting to have a steady volume of calls, so that we can ensure that our doors are open the next day and then our team's gonna, everything's gonna go good. What we're experiencing right now, I know on our side, is an extremely high demand. And I think that's you alluded to that a little bit. That's testing our systems. It's testing our teams in our business. It's just the demand of the industry ramping up all at once. I know y'all offer a really high level of service and you strive to make your business better every day. How are y'all?
Oh man, it's insane. I would say over the last 2 weeks, I think we tallied somewhere around 25 contracts.
Oh wow.
That's on just purchases.
Yeah.
Like, we're not talking about people that want to build houses and people that want to refinance and things like that. I mean, that's, it's a blessing to have that business. 10 years ago when I was in this business as a youngling, that kind of stuff you beg for, you plead for, things like that. You don't realize you're not ready for it at that time.
Yeah.
There's no way you could take care of it, that business. It takes time to get there.
Yeah.
But we feel the pressures of that in ways, man, that even surprise me. I'm like, let's just go out and take over the world. Let's go do 100 loans a month.
Yeah.
Good Lord, I'd die.
Yeah.
I love my team. My team's amazing. And there's no way that I do what I do without the people that are on my team, because you can't be everything to everybody.
Yeah.
Right? If, I have a lady named Debbie. She's my loan assistant. And I call her the document queen, because I hate paperwork. I don't want to mess with it.
Yep.
And the amount of paperwork we have to deal with on a daily basis is atrocious.
Can imagine.
I mean, every loan. I mean, you're talking about bank statements, tax returns, pay stubs. You think of financial wise. People always say, "Oh, I feel like you want my blood sample next." Kids, firstborn, whatever you say. That's the way they feel.
Well, and that goes back to being open. It's like, you know what? We don't have to have as much information as we're asking for. Like, maybe we don't have to. Like, y'all are highly regulated, so you have to have a lot of it. But on one hand, the goal was for me to dive deep into your situation and do the best thing that I could do for you. Offer you the highest level of service and figure this out. It's a strategy thing. It's a puzzle thing. The more pieces I have to the puzzle, the better the puzzle is going to look when it comes out of there.
Right. Well, and I tell people all the time, and if any of my underwriters are listening to this, just close your ears for a second. But, just because a borrower provides you with something that may be immaterial to a loan approval, everything that's on the list isn't always necessary. And so you kind of have to figure out, okay, what do I not need?
Yeah.
What do I not need to provide that's going to cause a problem that
Convoluting this.
shouldn't? Exactly. Most loan officers have a problem of creating their own problems. And they just don't understand why. Why am I running into these problems continually? Well, it's because you're doing, you're providing too much information. And so you kind of have to figure out, as you ramp up your business, as we do 50 loans a month, and we gotta go, okay, where can we trim out things that cause us problems?
Yeah.
Have sit downs. We have regular sit down meetings with my team. I've got 5 people that sit with me and my team that help me manage my business, and it is because I can't be everything to everybody. Right. I'm really good at what I do, which is talking to people, talking out scenarios. I used to be an underwriter. I told you I was a credit analyst when I started, and more in loans essentially. So I was a glorified underwriter. So I learned to do what I have to deal with now.
And an underwriter does what usually?
They review all the financials and figure out if you meet the guidelines to qualify. So an underwriter's taking all the tax returns, bank statements, pay stubs, and going, this borrower can or cannot pay their obligations. Where did the money come from to buy the asset? And does it meet Fannie Mae, Freddie Mac, FHA guidelines? Are we going to be able to sell this loan to Fannie and Freddie and then be happy with it? And that's what the underwriter's doing. So me as a loan officer, I'm gathering all these documents to say, yes, by my review, this meets the underwriting qualification. But you have an underwriter who is a different level that's going to review the same stuff, and they may come up with different questions I didn't have.
Yeah.
But it's my job to know, you gave me this form. I know I'm going to need X, Y, and Z to go with that to make sure the underwriter's okay with that.
And so how much leverage or leeway do y'all have with that? Say the underwriter's like, I don't agree with it. But could that still be a potential loan that goes out? Or is that kind of like, well, no, it didn't meet X, Y, and Z, so it moves over to this list?
I have built my reputation on being the guy known as the creative lender. Okay,
we like creative lenders.
I'm telling you, I don't give up very easily, and I will fight tooth and nail for a deal, because at the end of the day, this is somebody's house.
Yeah.
Right. This is where somebody's going to lay their head down at night every single night, and they've told me that's where they want to sleep. That they tell me that's where I want to live.
Yeah.
Well, I'm going to take this seriously, and I'm going to try to get you your house, but it just takes time sometimes. I tell people all the time, they're like, I want to close and I want to close tomorrow. That's great. We're probably going to close in like 2 weeks, but I want to close tomorrow. Okay. Yeah. You want to sleep in your car, or do you want to sleep in the house? Which one you want? Because you can't have both. But it's just taking the time. Most problems people have in lending is that they're dealing with someone who does not take the time to just figure out how to make it work. And that is what I'm known for, is to sit down. Because I have underwriters kick back all the time. Within the last 2 weeks, kid you not, last 2 weeks, I had 6 files sent back to me as a declination. Loan underwriters saying, yeah, these loans can't be done.
Right.
So far, I'm 5 for 6 of turning them around and saying, yeah, right. And they've reapproved those loans, and now they're moving to closing.
So it's twofold there. The first thing, from a client perspective, what we feel like when we walk into a loan officer's office is, so, okay, we're going to go talk to them, and they're going to tell us, yes, we can do that, and then that deal's done. Well, not all loan officers are created equally, right? With the experience of going through the credit analysts and the underwriting positions, it's like, okay, if you have two different loan officers, and one is basically a salesperson that's sitting at a desk, and they're going to roll everything to the underwriter, and then just whatever comes back comes back.
Yeah.
You know, then they
It's a
they
numbers
deal
game
with,
to them.
Yeah, it's a numbers game. They deal with what they don't deal. You know, you get a hey, sorry, your loan didn't work when it doesn't. If you have the experience on the front end, then you can, you know, it's not a product, it's a service.
Well, and that's the big difference between, I won't mention any particular company names, but big internet lenders.
Mm-hmm. I was about to say, it's like a customer service thing. Like, you're smaller, you can actually provide for that person versus them just.
Well, I can take the time to provide for them. I just will, because I cannot tell you how many loans I get per month that come from other lenders who did not do their jobs. People literally go all over the place, and I've had a lot of people in the last year that they end up calling me. I get them pre-qualified. They go with the internet lender's supposed rate, right? And then 3 weeks later, they call me back and go, yeah, so I'm coming back because the other guy couldn't get it done. And I'm like, oh, yeah, what problems you run into? And they start talking, and I go, oh, yeah, they ran into XYZ, right? And they go, yeah, they couldn't get it done because of that. I go, well, I already had a solution for that. Because at any time, I'm usually running 2 to 3 backup scenarios for all my borrowers. You know, it's just how you look at it. The reason I fell in love with finance in college and those classes was because numbers tell a story.
Yep.
Okay? If you're good at reading the story by just looking at the numbers, you can almost figure out anything. That's why I love it. You know, if I had taken the time, I had 2 choices whenever I went into finance after college. I got invited to open an Edward Jones office or to start a mortgage company. And I was like, that's a really hard choice. But I took mortgage, and this is kind of a, you know, half-baked answer. But I chose mortgage because I could actually do both. As mortgage, I can help people with their, you know, loan needs of getting a mortgage they actually need, rather than just sold something that doesn't help them. But I can also give them financial advice.
Yeah.
You know, and I tell them up front, you're getting what you're paying for. You're not paying me to give you financial advice, but I'm giving it to you anyways. Yeah. So it's worth what you paid for it. But I know enough about basic finance on investment levels and things like that to where I can give you advice to help you get ahead, get to the next level, budget, things like this, you know?
Yeah, like I'll have a client come in for a new home and they have a large down payment. So maybe they just sold their home and they have $100,000 to put down on something that, you know, they don't need to. Okay, maybe there's equity in the property, etc. So they have the $100,000 and they want to put it towards the home because they want to lower their payment as much as they can. Okay, so is the payment the goal? Because a lot of times they have 3 car loans or, you know, small loans over here on the other side of the sheet. Yep. And it's that, okay, well, if we'll look at this strategically and use this money to put over here towards these shorter term loans, then that frees up a whole lot of debt service, and then you can build the house that you actually wanted instead of the one you're having to build, and you leave with a payment that was lower than you started with when the home you're living in right now. You know, so just restructuring their debt with strategy can get everything, still have the same vehicles, still have the home that you want, and you have a less payment than you walked in instead of one that your debt's not covering.
And that's exactly what I'm always telling people. My job is to help you figure out what... Usually everybody's dealing with a limited amount of money, and I don't want to use all your money. If you have $500,000 or you've got $5,000, I'm going to try to help you figure out where your money is going to help you the best. Because a lot of people go, well, I'm going to put down an extra $100,000 on the house. Okay, congratulations. You just saved yourself $200 a month.
Yeah.
And they go, wait, what? I go, yeah, you're not going to save yourself very much money by doing that.
Right.
They feel like they're going to save a ton, but they're really not.
Right.
And again, that math did not necessarily equate to exact, savings per month, but it's all relative.
Yeah, this isn't financial advice, by the way.
This is not. I didn't crank out my calculator to determine the monthly savings on that plan, but you just have to take the time.
That's my wife's perspective. A lot of times is like we pay it off real quick because it's a time thing. It isn't necessarily like the $200. She's like, we'll be done with it at this point. I'm like, no, we want cash flow. We want this. We don't want to do that. But two different perspectives. Sometimes.
And I got a lot of people right now, that are refinancing. Well, the refinance boom is almost done.
Yeah.
Essentially, that has gone by the wayside for a lot of people, and a lot of people have taken advantage of it, but a lot of people that still have a lot to save right now. There's still a lot of 5% interest rates hanging out there that people never refinanced. Why? I have no idea. But they didn't. They should still refinance. But you can take that money. I had a guy right now. We were refinancing. He had 27 years left on his mortgage. Okay? I did a 30-year refinance. I cut his interest rate by 1.5 points. And he's going to save $284 a month. But I know a trick, and I've already told him the trick, of how to pay his mortgage off in 23 years without making an additional dime of principal payments. Just knowing how to apply his mortgage.
Yeah.
And teaching them how to save.
Yeah.
I mean, again, I can give people financial advice and loans at the same time. You know, something that most other loan officers aren't going to take the time to do.
So is this like forgive me for being, ignorant to it, but is this like a firm or something? Or is this like you work for yourself and then you work through these other companies?
Mm-hmm. Yeah,
Okay.
so as a loan officer, I'm a licensed originator. And my license is sponsored by...
Or just like, I'm going to be passionate about race cars now. Like, that's not how it works.
You're not just going to fall in love with finance, I
Right,
guarantee it.
For sure.
But, that's our thing. If you can find a way to help people, I mean, what do they say? That if you go into business just to make money, you're going to struggle. But if you go into business to help others, the money will follow.
Yeah.
It's just that mentality of if I'm going at this, like you're saying, with an ability and a plan in mind, if you fail to plan, then you plan to fail.
Yeah.
Right. And so that was one big thing for me. And one thing that kind of really helped me, build into my other businesses, and you may be going into this later on, but real estate was the perfect vehicle for me to be able to do many other things. I mean, because mortgage, you got to think about this. I get to see other real estate deals before they ever hit the market.
Yep.
So, it kind of built into me being able to do, investment properties and other things like that.
And it gives you a perspective of someone who's trying to do that almost, because some people who are just sitting in a room probably don't get that perspective.
No. Right. Well, I get a lot of phone calls from people that are like, hey, man, I hear you do flips. I'm like, yeah, I don't tell people I do flips, but yeah.
You just did.
Yeah, exactly.
You just told a lot of people. Six people. Like, yeah, there's got to be 6 or 8 out there.
Sweet.
Line's ringing.
No, but they, but that gives me the opportunity. People call me and go, hey, man, can I get your advice on something? I had a guy call me the other day, and he was like, hey, this house is a great deal. It's run down, looks like a piece of crap, but I want to buy it. I want to flip it. Can you come look at it with me and give me your opinion? Sure.
Yeah.
So drive over to the house, walk through it with him, and say, yep, you're right, this is a piece of crap. I go, this is how much I would pay for it. And that's all he was asking me for. I was like, what would you pay for it?
Yeah. That's why we want to have you on. I know me and you have these conversations quite a bit. Why not hit record on one and let people listen in? So that's pretty much the essence of what this podcast is.
Yeah, I mean, you have no idea what you're going to glean from something, by just having a conversation with somebody. And that's what I love about real estate is the fact that, man, I never see the same deal twice.
Yeah.
That's fun. So it's never monotonous.
Yeah, it doesn't. Yeah, it didn't. Right.
I mean, you'll be dealing one day with a guy that's got $5 million, and you're talking to him, and you're kind of like, what do you do again? And you get to hear about a business or an industry you've never even known existed.
Right.
You can make how much money off of stamps? What? Just stuff like that.
That's cool.
Yeah.
So you said that it's affected your other businesses. Do you run it? Do you have other businesses currently, or what else do you do besides that?
I've done a plethora of things, but things that actually I should invest in. I built a social media app it was a fun project for me to work on and just play with because I wanted to do something like that.
That's cool.
I always said I wanted to have an app on the App Store. So, I went out and I hired a development team to build an app that I had a dream to do, and they put it on the App Store. It actually got traction, worked.
Yeah.
It had proof of concept, had people playing with it all the time.
Twitter?
Huh?
Is this
How did you know? No, but it was frenemies.
Okay.
And
Tell me about it.
It was an app. It is an app that actually is called it's competitive social media. So I got sick and tired. One day I was sitting there looking at Facebook and Instagram, and I was like, these are so pointless. People are literally posting about their food all day long. Cats, things like that. And again, I'm not trying to bash people that do that. Not at all.
Easy.
I know, right? Sorry for the six.
We got a lot of cat fans.
But what I got tired of watching was just it seemed like there was like a pointlessness to it all. Like, what type of value are these things bringing? So I was like, all right, I'm I'm a competitive guy. What would make social media fun? I said, so Frenemies built a platform where you can actually go on and post competitions. So you can challenge your friends or strangers, or you can make a personal competition to get people's opinions. So essentially it was an opinion gathering app where you could go out and say, hey, Jeremy, I'm going to challenge you to the, goofiest push-up challenge. Whatever, something crazy like that. Or a crazy cat meme challenge. Anything that you could think of, okay, as far as the challenge goes. And
It's awesome.
yeah.
It's like purposeful content almost, as opposed to just
Exactly.
I went to the store today.
Right.
Yeah.
Yeah, it wasn't just posting about a meme that changed your life. It was about the purpose of the app was to give people meaningful community.
An actual engagement.
Correct.
Yeah,
Actual
cool.
engagement.
Yeah.
You had to engage with somebody else and or ask for other people to engage with you.
That's pretty cool.
So, and the most votes win and and it's going to take about $3 million to get it to the next level, I found out. Yeah. So I was like, I'm going to table this for a little while.
But you did get an app on the App Store.
But I did get an app on the App Store.
It's really where you set your
Apple.
goals.
Yeah, and it was one of those things where I spent a lot of money doing it, but it was a pride thing for me.
Cool.
Super cool. One day it'll hopefully be back online. We'll see.
It might have just put your foot in the door. You might develop some other crazy app one day that you don't even that
Exactly.
we didn't think about.
Well, and it gave me knowledge on something I didn't know anything about.
It definitely gave you something that you went out there researched more than the rest of us, so now we call you for it.
Right.
Because as soon as we get off of this, I've got some app questions.
Well, I mean, and again, you just never know who you're going to meet. I mean, I had a college professor in one of my high-level finance classes, and smart guy. It was very interesting. Cussed like a sailor in class. It was hilarious. But he asked the class a question one day, and he said, "Why are y'all here? What do you think this college is here for you for?" Man, half people raise their hand and go for a college degree, to get a job, to make good grades, bullcrap like that.
I wouldn't have raised my hand.
No, I didn't raise my hand because I was like, I'm not getting put on the spot. This guy called me. This guy called people.
Sure.
Right.
Why I'm here.
This guy's like a setup.
But no, I wish I could remember the guy's name. I could see his face. I think it was Dr. Bella, actually, was his name. And really cool guy. And he looks at everybody and he goes, y'all are a bunch of... He says, y'all are here to network.
Yeah.
You're here to meet the person sitting right next to you in the with them or against them.
Yep.
I was like, mic drop.
Yeah.
Pin drop in the room, dude. Everybody was just like,
Yep.
mind blown. And that just kind of solidified it for me. I'm kind of a social butterfly. I like to get out and talk to people, meet people. It's a blessing in this business. You're just meeting everybody. And, that's why I'm here. Make a phone call one day, talk to Jeremy, and bam, you know. But just networking. That's the whole purpose in business. Get out and about. When I do something different, I met people. I had a guy, it was funny, before I even built that app, it was an idea phase. He offered me $1 million for 51% of it.
Wow.
I'd have sent it.
Yeah.
I'd be like, Tyler, guess what? We got $1 million.
Yeah, exactly. And this guy, he ended up, and I told him no. I was like, no. I said, it's a to me at this point, it's a $10 million app. 100 million, billion, whatever. To me, it was worth more owning all of it and it being worth nothing than selling 51% of it and him taking it and turning it into something I didn't enjoy.
100%.
Yeah. And he could have, ousted me at some point if he wanted to. You've seen that plenty.
Yeah.
But I did the social media app. I built real estate portfolio for investment properties. I built a construction company where I was building homes for myself and doing things like that so I could learn the construction trades and learn how to do that. And realized real fast I do not want to be a builder.
Yeah.
That is, I'm going to leave that to this guy right here. That is not my forte at all. It takes a special person that has the time to deal with that, and I'm just not that person.
Yeah.
I'm running a mortgage company, family, that kind of stuff. My father told me, build the cash cow and let it take care of you.
Yeah.
If you take away from the cash cow will take away from you.
It's true.
Yeah, that's good advice.
Yeah.
It's a good point, Father.
Yeah. Yeah, and the networking is so important, and it all comes down to that. The networking is the foundation for building all of those relationships, and everything is built on those relationships. I mean, like you said, your whole family lives within 5 miles of each other, or within 5 miles of here, like within the same few hundred acres spread at least. That's that's a valuable relationship. You know, a lot of people have families, and it's like, well, yeah, I've got a relationship with my family. Well, is it a true relationship? You know,
Right.
like it's like y'all have family business meetings. You know what I mean? So that's the same way with the success of the mortgage company. It's not only the clients that you network with, but the lenders, the other brokers. You know, every part of it. The more network or the more relationships you have, the better your ability to help your client.
Right. Well, diversification. You know, anybody would tell you diversify your assets, whether it's your assets of your time, assets of your money, assets of your relationships, whatever that is.
Right.
Diversify.
Right.
You know, build out and around yourself. What was it? I can't remember the president. I want to say it was. You know, I don't have to be the smartest guy in the room. I need to be surrounded by the smartest people.
Right.
And how do you do that?
Yeah.
Network.
Yeah, I've got a mentor that says when I look around and I feel like I'm getting close to being the smartest guy in the room, I need to change rooms.
You need to change rooms. That's right.
Yeah. Well, good news is I'm normally pretty safe in the rooms that I'm in.
Same. Yeah, I don't want to be that guy.
Yeah. Well, man, with everything that's going on right now, we're seeing a lot of prices go really high. You know, and you mentioned we may be coming close to the boom, as it were, people pulling a lot of idle equity out of their properties, doing something else with. You know, there's a difference in prices and affordability. You know, pricing being high is one thing. In 2000, you could buy a $200,000 house. In 2020, that same house is $400,000. But what did the affordability really change? In 2000, you know, a 9% interest rate wasn't anything crazy.
Right.
So you're looking at a $1,600 a month payment, whereas in 2020, a 3% interest rate wasn't anything crazy. Your house, it's double the price. So the affordability, I don't think something that people have really been affected by as much as like a sticker shock.
You're right.
So, you know, what does that look like moving forward? You know, at the bottom of an interest rate environment, we have lived the last 40 years with dealing with prices going up every day. But to offset that, for the last 40 years, interest rates have basically been going down every day.
Right.
And now that we're at somewhere near the zero interest rate level, you know, because, well, for, you know, sake of the podcast, a 3% loan, correct me if I'm wrong, but a 3% loan is essentially a 0% loan with 3% added from the lender.
Pretty much.
You know, coming from the Fed, that money's at zero. It doesn't really have, you know, saying that it's at zero. If we're at 3%, it doesn't mean that can go down to 0%. You know,
No.
We're already there.
Well, so what you got when you're talking about, it's called bond spread.
Mm-hmm.
Okay, it's mortgages are backed. People have heard this. If you ever watched the movie The Big Short, it's a good movie, and it gives a very basic level understanding of what happened in '08. But it talks about bond spread. You know, BIPs. It's mortgage-backed securities trade for a specific percentage above the Fed rate. Okay, so if the Fed rate is 1.25, 1.25, and then your bond rate may be 1.75, so there's a 0.5% spread the banks can make on that bond, right?
Mm-hmm.
Well, if the mortgage is 2.25, you know, there's another 0.5% that the mortgage service companies is sharing with everybody. And service companies, mortgage companies like the mortgage service companies, they were operating on a spread of like 0.25%.
Yeah.
That's why they have to operate in billions of dollars, because millions of dollars do not pay the bills, right? And it's really, really hard to quantify and put in our heads as something we can, you know, understand. But over the last, like you said, 40 years, rates have been just steadily dropping. And over the last 10, you know, I would say I'm going to back up to October of last year. Up until that point, we just saw rates go to literally nothing on the Fed rate.
All right.
Okay. And that was just kind of, it was in our industry awesome to look at and go, oh my gosh, everybody can get money for almost nothing. You know, it's not literally nothing. We're talking like, you know, you can get a 30-year loan for 2.5% interest rate. Okay. That didn't mean the bank was making 2.25% because they were borrowing it at 0 and
Right.
2.25, because there was a bunch of people in the middle. But that essentially was free money. You could borrow money for 30 years on a house for less than you could on a car.
Right.
In a lot of cases. I was lending money to people cheaper on their house than they could get at the auto dealership on a car. That's crazy. And for 5 times as long. And now, since October of last year, we're seeing that reverse, and now it's going back up to where they're trying to curb inflation because the cost of goods is increasing. You deal with this on probably a daily basis. Getting material is difficult. So, supply and demand. Mm-hmm. And pretty much always be true. You would rather borrow more money at a cheaper interest rate than less money at a higher interest rate.
Right.
I don't know if you've ever seen that ratio or that spread, but if you borrow $400,000 at 3.5%, it's cheaper than borrowing $300,000 at 4.5%. Because you paid more for the money. Even though you borrowed less money, you paid more for it.
Right.
And so it is significantly more expensive. And that's why people always go, Tyler, is it a good time to buy? It's always a good time to buy. Let's just be real.
Yeah.
Okay? Are you going to be more upset if the rates go up or down? You know where they are today. We have no idea what they'll be tomorrow, but we have a pretty good idea now. They're going up. And I can tell you this much from I pay companies to tell me what happens every day in the bond market because the bonds are how we track rates. Okay? They've done nothing but go up for the last 3 months. 1.5% higher than they were 3 months ago on a 30-year fixed interest rate. I don't care what loan you're looking at. Conventional, VA, USDA, FHA.
Yeah, of course we get the same questions. Is it a good time to buy? Well, should we wait for prices to come down? So we don't have any historical evidence of prices ever going down.
Yeah, no,
in an inflationary environment. And if they're going to continue to print money, we're going to continue to have an inflationary environment. I mean, even the target was projected at 2% on the good years where they weren't even talking about inflation. You're still projecting a target. It's what makes the entire system run.
Right.
Is having that little bit of increase each year. So you know that the costs are going to go up. And if you can lock in a long-term and then you can buy it today, then there's very little benefit in waiting period. There's in an inflationary environment, holding cash is going bad.
Right, you're losing money.
You're losing money. So the only way to really hedge the devaluing of the dollar is to borrow long-term debt on something real.
Hedge your assets.
That took me so long to understand. Me and him, I've known him my whole life, and we'll talk about business or investments and stuff. And he'd be like, and I was traditionally trying to leave the oil field to work for myself, and he'd be like, well, how much money do you got saved up? And I'd say, he'd be like, you're losing that money every day. You need to do something with it. And I'd be like, I'm holding it. Is what I'm doing with it. Leave me alone. It's a nice little pillow, or it's like a parachute, or whatever. And then now I'm like, we have to get rid of every dime we have right now and lock it into something we can use later and turn it into 15 cents.
It's safer to save milk.
Oh my God! But I didn't realize that. I don't know. I guess just the upraising. I'm just like, no. What do you? You keep that. Hide that in a jar in your yard.
Yeah, you'd be better off buying stamps. At least those appreciate every year. That's what I heard.
Yeah, no kidding.
But cash is king. In any business, cash is king, and it takes a certain amount of cash to operate, right?
Yeah.
And my mentor has always told me, keep your powder dry. Keep your powder dry.
No one's advocating for over leverage.
No.
If you lose control of the debt, it's much more damaging than.
Right. But if you don't use your assets, if you don't leverage your assets, I mean, unless you're just somebody that wins the lottery and you get a $50,000 check every single month, and you don't have to worry about it. I mean, it's not most people's scenarios. My father is, the most successful person I know, and he leverages.
Right.
And it's not. I'm not saying that everybody should leverage the way he leverages. I'm not saying that. He's not over leveraged, but he's got cash and he's got loans.
Yeah.
But the point is there's a happy medium between the two. Again, it's like I said, you have to have a certain amount of cash to operate. But that doesn't mean that you just hoard it all and don't do anything with it, because it's not doing you any good sitting in the bank.
And the same thing for equity, right? Or
yeah,
because we're sitting in our house, our house paid off, oh cool, we reached the deadline, and I'm like, we should be using this, we should be leveraging this as opposed to just letting it sit there.
Right. Most people like that. I tell right now, I have a lot of guys. I did a study years ago where there was a scenario where this guy said, I want to take $300,000 and pay cash for a house. So, okay. I said, what if I could show you a way to make the house pay for itself? And he said, well, that's an interesting thought. Okay, show me. So I got an Edward Jones advisor, and I'm not necessarily advocating Edward Jones here. It's just telling you who I worked with at the time. And he said, I said, man, find the worst performing 30-year return. And I want you to stick $300,000 in a conservative S&P 500 match fund. Like, you know. And he said, okay. And so he ran a $300,000 deposit day one in it was 1992 was the year that they deposited. Okay. And it went 82. And it went from 1982 to 1992 to 2002 to 2012. That was the worst financial time, I believe, in the history of America during, the stock exchange. Okay? Yeah. Because it had major financial crashes. Mm-hmm. It had, the 82 oil crash, yeah. The 99 dot-com bust, and then the 2008 financial crisis. The rate of return, that $300,000 invested during that period of time, deposited $300,000 at the end of 30 years, and it was a dividend-paying fund that would pay the mortgage every single month. So it would pay the mortgage off the dividends that it would disperse, and at the end of 30 years, that same $300,000 was worth $1.8 million.
Yeah,
and the house was paid off.
Well, so. Yeah, even if you say you have a $200,000 home and you still owe $100,000 on it. You have $100,000 in equity in that home. You go pull the $100,000 worth of equity out of that home and you're paying 4% on that money. So you have a $200,000 loan on your home for 4%. So that's $8,000 a year. You go buy a $100,000 rent house that produces 8% cash on cash return. That's $8,000 a year. The $8,000 a year from the rent house pays the $8,000 a year from the mortgage. You get to keep your mortgage. You get to keep your home. You get to keep the rent house. Now you have an asset that's growing in wealth or growing in value, and you still can control the debt with everything. That's predicated on the income, right? Just like the scenario that you said is predicated on that investment going up. But with there's got to be something. There's always some type of, risk that we look at, but everything's got a risk tolerance to it.
And, if you just want to if you want to be risk-free, it's really not risk-free. I was going to say bury your money in a coffee can in the backyard, but again, you're losing money.
Yeah, it's a fallacy to think that we can be debt-free. Every dollar says Federal Reserve note. It's a note. It's just an IOU. There's no money in the system.
And the more they print it, the less it becomes valuable.
Yep.
Or the less valuable it becomes.
Yeah, strategic mortgage brokers are worth their weight. Because you're looking into getting into some investment and you don't have the money. You 15 minutes in your office and now you have the money because it was locked up in that home or in your backyard.
Yep.
Somewhere.
Yep. No, I've helped people, a lot of people with that specifically. A guy right now, he's looking to do a cash out refi on his house. He goes free and clear. No, it's that he thinks he has $16,000. He said, I got some land I want to buy. Do you do home loans? I was like, yeah. Do you do land loans? And I was like, yeah. Instead of doing a land loan, do a cash out refi on your house, go pay cash for the land at a lower interest rate than you would a land loan. And then here's how you pay it off early. And by the way, when you sell your house, then you'll pay these loans off and you'll have the additional equity available and your land's free and clear. And there's just so many different ways of doing it rather than just looking at one option.
It's financial chess, ain't it?
Yeah. It is. It literally is.
15 steps ahead. How does this affect that? So
yeah. And I think what's something good to get out of this conversation is that all of these things are options that you can do. All of them are possibilities because you have control of the situation. You can help who you're designed to help. You can go out and study the things that you're interested in, meet the people that you can do business with, other people that are in your space that are doing good business, that are in these same avenues. You building those relationships, you're doing what you want to do every day. That level what for ourselves means to me.
Yeah.
The freedom to help the clients that I want to help, the freedom to help the clients the way I believe is best to help them, and the freedom to go to a kid's baseball game or something like that. I know you're really heavily involved in your kids' sports. What do y'all play 6 sports every 4 days or something, right?
At least that's the way it feels. We actually for the last 2 nights have gotten to sit at home and do nothing, and I'm like, what is going on?
What are we supposed to do right
Literally, my wife goes, "We have another free night." Like, what is going on in this world?
Did they
right
kick
now?
us out of something? Did we forget to sign back up for something?
Exactly. Did we get kicked off the team? We didn't know it, but it's just what was it? Quality of life is determined by two things: freedom of time and freedom of money. It had to be $1 million a year. You could make $97,000 a year and still have both. How hard are you having to work to make that $97,000? That's the thing. Figure out what you're good at. Focus on that. And find a way to make it easier. Every year I was in business. Every single year I had the same goal. Is at the end of the year I want to figure out how to make the same amount of money with less time.
Yeah.
And my whole point in doing that is if I can make the same money in less time every single year and it just compounds and grows, well, talk about leverage.
Yep.
And, well, inflation is going to get you there pretty quick, man. So
I got to watch out for that. Yeah. I tell you, well, it's one of those things. You said live within your means.
Yeah.
You know what I mean? Yeah, I understand how much I need to live on a monthly basis. And the rest, my dad has he said, pay yourself a salary.
Yeah.
And everything else goes back to the business. Pay yourself first. He said, and that's not to live on. That's your kitty.
Man, this book right here changed my life.
Profit first.
Yes.
Yeah.
Yes.
No, exactly.
That's exactly what the premise of the book is.
Oh man, my dad. They didn't have hardly $15,000 to spare. Okay, but he paid a company $15,000 to audit their books and tell him how to make money better. He said before that, man, we were broke all the time. We just run through the money. This company came in and told him how to pay himself first. And 28 years later, he's like, we're in a position that was unimaginable then because we paid ourselves first.
And you take the burden off of that business, then you have time to build a business. Then you have time to really grow it and help who you're out there meant to help.
Right.
Yeah. When we're struggling to stay alive and move money from over here to over here just to stay up to, it's hard to do anything well. It's hard to do anything else, to put your oxygen mask on first, basically.
Right. I like that.
Yeah. Can't help anybody else.
I was thinking about it on the way up here because it seemed like when I was working in the oil field, and I play music for a living, so I'll be out like 3 nights a week playing somewhere, and then get up at 6 in the morning and go to the oil field again. And a lot of money back then, and no time to do anything I wanted. And that was my whole goal. Was like, I need more time for me, Yep. And then now here I am, no money. I have all the time in the world.
We're doing a podcast because we got time.
That's right. Well, I mean, it's just again, you find that happy medium, and it took me, golly, dude. Like I kid you not, the first 7 years of my career, it was all business all the time. If you called me at 9 o'clock at night, I answered the phone. Mm-hmm. Okay, and I built my reputation on that communication. People knew they could call me and get a hold of me. They still do.
Yeah.
But I have gotten to a point in my career where I have told people, hey, I respect your time, you respect mine.
Right.
After 6:30, you can text me. Don't call me.
Yeah.
If you call me, I won't answer.
Right.
But you get to a point where hopefully you build your business to a point where it takes care of you because you've taken care of it.
Yeah.
And you can walk away at a certain point of the day. My family, my wife told you, she was like, my wife told me that obviously you worked all the time. But we had a friend, I was at a birthday party one time. This is bad. Okay, this is when I realized that I was working way too dang much. And it was like 2017 because it just blinked in my head. I was at a birthday party talking on the phone. And, kids are playing, all that kind of stuff. And we're at a friend's house. And it was their kid's birthday. And I get off the phone, I come over there, and we're all talking. And the guy goes, dude, you're on the phone all the time. And I was like, yeah, I'm always on the phone. And he was like, no, like all the time. He says, I've never been around you when you weren't on the phone. And this was somebody who hung out with all the time. And I was like, I mean, yeah, of course I'm on the phone all the time. I'm working, And he was like, no, dude, you don't understand. Like, you're on the phone all the time. Every time I see you. And then it was like, for some reason, it became aware to me, like, everybody I saw that week was like, you're on the phone all the time.
Yeah.
Is there something I don't know? And it just, I realized at that point, and it just, business can consume you as much as you allow it to. Carve out time.
Yes. So, and it's not just something that you can notice that easily a lot of the times because it's not, you don't feel it. You don't feel that you're doing something that you don't want to do. You're doing exactly what you want to do. It's just you don't realize how much you're putting towards it.
Right.
You know.
Got to keep that ball rolling or whatever.
Right. Well, it felt natural.
Yeah.
It just felt like that's my groove. You know, my father is a work machine, and I always I reference back to him because he's my point of reference on these things. But you know, I had kind of watched that, grown up with that, and realized like, all right, yeah, this is how you know, a man's supposed to be. This is how work's supposed to be. I'm supposed to work all the time. Okay, cool, I can do this. But you realize what you missed. You know, I realized all the things I missed with my kids during that period of time. And like you said, now I'm active in all my kids. Like I made a promise to myself I would coach my son's baseball team every year that he has played. My daughter, I've coached her softball teams. You know, that's not a pretty sight, but you know, my third child, I don't know what she's going to do, but I'm sure I'll be there right there for that. I will not miss a game. I have made that promise to them that I won't. I won't do it.
That's awesome, man.
Yeah, I missed so many. Like it seems like every time I'd have a gig would be like, okay, well it's New Year's Eve or it's there's a Christmas thing, you know. So I've missed so many holidays and stuff that I thought were like, well, no, I got to go do that thing. You know, I don't need to go do that thing. You know, I don't have to go to Lufkin and you know.
Well,
but
it's just that priority mindset.
Yeah, right.
You know, and again, our families are always priorities, and our businesses are priorities. But we just got to figure out where's the happy medium.
Yeah, you hear almost every entrepreneur say something about freedom, or then something that the premise behind that is freedom.
Yeah.
You know, I'm in business for myself because of freedom. And then you look up and you're working 120 hours a week going, well, where'd that freedom that I was talking about go?
I'll get it one day.
Yeah, exactly. Yeah.
As soon as I get all this other crap done, I'll get it. Yeah.
Right. All right. So last time I ran an outro, Steve yelled at me because he wasn't done.
Lightning quick.
Done.
Yeah.
Questions.
Do you have anything you'd like to promote? Do you have a website?
Do
you want these people to get in touch with you? Do
Yeah, I mean,
want to? Yeah.
If somebody wants financial advice, I mean, you can just call me on my cell. You know, you can go to my website.
I don't think we should have done that.
No,
Yeah.
that's okay.
Not after 6:30.
Not after 6:30. Yeah, so, that's my cutoff, guys.
Yeah.
If you want me, text me.
Yeah.
But you know, communication is my number one thing. So if somebody needs me, just reach out. I love talking business. I got a buddy of mine that I talk business to almost every single day.
Yeah.
Just because me and him we're always brainstorming. Number one thing I enjoy is talking business. So take that back. Number one thing I enjoy is God, family, and then talking business. So yeah, there's my priority list.
And being a politician in the near
Shoot,
future.
heck no, I'm out of that business, man. I did my tour.
Did you?
Well, I did my tour on a city council for Huntsville. You know, but there's a difference between a politician and a public servant.
Oh, yeah.
You know,
yeah.
public
Says
servant.
a true politician.
Public servant. You know.
Politician. Yeah.
You know, yeah, I have no interest in that. Maybe my wife. She would be way better at that than me. She looks way better than me, and she probably gets along with more people than me. You know.
Yeah.
I tell people all the time, I don't necessarily like people. I just tolerate them. You know, put up with them. It's a joke, but
Yeah.
I think she would be way better at that than me. Politics is not my forte.
Okay, so you're signing your wife up for politics.
Fine by me. I've tried to convince her to run for something. She'd be great at it.
Yeah.
If only.
Awesome. Well,
Thanks for having me.
Yeah, if somebody wants to get a hold of you for the mortgage industry, what's the best way to reach out for you for the mortgage brokerage?
Just email me at Tyler, Tyler, at kgcm.com. I have a website. It's just kgcm.com, and you can look me up on the website. Just Tyler McCaffety. It has a direct link to me and all my info. And they can reach out to me there at any time. I tell people don't call the office, because if you call the office, it goes straight to my cell phone. So
Okay. Awesome, man. Well, thanks a bunch for coming out and helping
Thanks
share
for
with
having
us.
me.
Yeah,
I love it, dude.
And if someone needed electrical work in the track,
You're not going to answer that phone.
I'm not going to answer that phone.
Yeah, call Cody.
Yeah, call Cody. Call Cody. Call Jason. Call Rob. Not me.
Yeah.
Sweet.
Yeah.
Awesome.
Thanks, guys.
Yeah, thanks, man.